Good morning, everyone. Market is open. We are going to start today's session with LH Web System, a new trading ecosystem. We have a wide range of tools, all within the same ecosystem. I will explain how it works as we go. We have automatic mode and semi-automatic mode. We can enter a buy or sell order simply by clicking. We can manage our trade, move our target, and our stop. We can also move to break even. Basically, we can perform a lot of trade management within the platform that makes it much easier, right? It also shows us volatility index VIX in real time, market speed, pullback size, displacement size, and market regime. It handles management and gives us very complete information to know exactly how we should trade. We have several management options within a trade. Regarding management, we can simply move our stop whenever we want by hitting the break-even buttons or different break levels. By simply pressing push stop, the stop will move by a predefined number of ticks. In this case, I have it set to 20 ticks every time I press the push stop button. So trade management is crucial, especially if there is high volatility or we are at the open. I try not to trade the open because the market becomes very aggressive. For example, I am now covered. I've pressed break-even 1. This is what you should do, especially in these moments where the market shifts and moves up and down. We could change our trading mode. We could set up grid management. That would change our approach. Our current trading style is much more defensive because the market is very fast. This type of operation is better because the grid covers us faster. It's as simple as that. We can deactivate the grid again and return to normal mode. Normal mode involves either changing the number of contracts if we see the market is too fast or just not for us. I wouldn't say we need to modify the target and stop because we can move them from here, but basically, this is what you see. We've made a few trades and you've seen how we can work and manage our trades. It's true that during the market open, I like to cover the trade quickly. Even if I get stopped out at break-even, I don't mind. I can also hit flatten and take profits wherever see, or let the trade run or stretch the target. I like to wait a bit because the open, as you can see, has very aggressive movements. Ultimately, if you want to trade the open, it's best to activate the grid and trade much shorter, more covered, and more defensively. That's also possible. As you can see, the automatic mode follows a set of rules and signals that I will explain later. You can also define what time you want to start or simply set up the strategy and let it run. We have filters for choppy markets. We can disconnect all our visual analysis like the fair value gap. The background, all of that is part of the analysis. As you can see, it is then very easy to determine the market trend, where it's going, and how to trade it. So, these types of ecosystems are very complete in that sense. Offers a lot of management and analysis, all centralized on a single screen. You can even change strategies. Everything, absolutely everything. Orders, order types, market limit, you can handle it all. I can also move the stop here and close the trade whenever I want. As you can see, we are trading in the middle of high volatility, right at the open. My chart is set to Chicago time. The market opened here at 8:30 a.m. Chicago time. We are trading and generating profits. No problem at all. What matters is knowing what management each person will use. If the market is trending strongly, like in the European session or later in the American session, you can deactivate the grid, go long or short, move the target, let the trade run and trail the target along with it. All those types of situations can be managed perfectly. In fact, this is a bit of an introductory video on how to use the system. Right now, we are in pivot zones and supply-side gap entry zones. This was at approximately 6 o'clock a.m. Chicago time. The zones are shown here. Again, you can deactivate all of this and trade with other types of analysis. I personally like to see the chart and the market study it provides. This would be our safety cloud. See? It's normal for pullbacks to stay within our cloud. If they cross it, there's no point in holding on. But if there is a pullback here and it continues, we can look for a long entry again. Sometimes I refer to pullbacks, sometimes to these wicks that touch, retest, and then move on. Let's let the market show us the way. Here we have a graphical interface where we can manage filters, activating or deactivating them. It's actually very interesting because these gray candles you see are filters for choppy or sideways markets. They can be deactivated. We can view it without that filter, but I find it very useful and interesting, information we need to trade. As you can see, in a very short span, we can fire multiple times depending on the management style we choose. If we want something more defensive, we use the grid. Market movement here indicates the average move is 245 ticks. 245 ticks is a bit more than 100. It's not a huge move. We aren't seeing big trends. This suggests that perhaps it's better to use the grid. Right now, pullbacks are 113. The pullbacks of the last few candles, we have 80. So we should wait because any pullback could take us out. Still, the loss is obviously controlled and within our parameters. The market is moving relatively slowly. Now, it has turned sideways, as marked there. All of this is information we can see in real time and use for trading. Obviously, if you want to use it manually, it's a great trading assistant. So the market starts moving back up. We can enter long again. The market starts moving back up. We can enter again. We can also reduce our risk mid-trade, stay at break-even, and let the market rise. This is my game right now, my strategy. As you can see, I could have closed now by flattening to take profits or let it run, whatever you prefer. I can also go to break-even 4, which trails it closely. Like I said, it's very useful to see these types of pullbacks within our cloud. Price continues, I fire. The operation is very visual, very intuitive. As you can see, we have a daily goal. Here, we've met it. My daily goal was 500. It tells us we are 121% above our target. All of this with 3 micro contracts, and in just this, we have a move that we've taken full advantage of. We could keep trading. Let's wait a bit now. The move might be exhausting. Here it indicates that directly. It's very easy to understand. There is a lot of information on our website. If anyone wants to schedule a demo, you can visit the website. I'll leave the link in the video description, but we can organize a live demo. Watch it work, and you can ask anything you need. It is absolutely everything. As I said, it's more than just a strategy. Inside, there are 3 ways to trade, 3 ways to manage a trade once you're in, and 2 ways to fire orders. Manual, by which I mean following signals or market analysis, or automatic. It has many filters to activate or deactivate real-time information on the screen. And that is very useful. Here it shows the date of the gap, because we might have gaps from previous days. So it indicates which day and where that gap comes from. Here was an entry gap for buyers. We still have these seller gaps from this morning. Let's see what happens as it approaches the zone. Once a gap is cleared, it disappears from our screen. The gap uses a series of data. In my case, you can regulate it. I set it to study normal 5-minute candles. You can use this type of strategy or study on any type of time frame or candle. I use Renko because it's much more comfortable for me, but some people use it on 1-minute, 2-minute, or tick charts. I like Renko candles, and it adapts easily to any instrument. Gold and oil are other instruments I'm using practically every day. Here is gold. The analysis for gold. It has very, very good moves, honestly. Here we have today's volume profile. Price bounced here. We are above the POC, point of control. Now it would be interesting to see a daily chart. Let's see. Here it is. These are daily NASDAQ candles. As you can see, I had a zone marked, which was the previous low that we broke these past few days. This whole area was very important. There were several gaps. We might be retesting the zone, or it might test it later today. There's still a lot of the day and the session left. This is just to keep the context in mind for trading. We could have traded this the same way you saw earlier. We could have traded here, no problem at all. All right, market continues. As you can see, pullbacks are to our zone, our cloud. So they are totally normal. These pullbacks are normal too. The thing is, when they happen more frequently, we might be facing exhaustion. We are likely facing exhaustion of this move here. We have to wait a bit. That's what the system is telling us. It's very simple to understand. The signals are very visual, and the management types can be quickly adapted to how the market is behaving. Here we have 131 ticks of pullback in the recent candles. We have 80. What does that mean? It's getting dangerous for us. Displacements are still normal, around 100. It continues. The market is quite strong to the upside. One also needs to have daily goals, right? Basically, if you want to keep trading once the goal is met, you should lower the risk you were taking. Yes, all of this without restarting any part of the strategy. You can change absolutely everything in real time. The automatic mode also has several models depending on market conditions, which I will basically explain to you. All of this has a single template. As you see it, it has one single template and loads everything. There we have a fair value gap zone that has just been shown to us. Let's see how resistant it is to this pullback. The market stalled a bit here in this zone. Let's analyze the volume profile. We have the point of control zone down here, which provides a sort of support for the day. Let's see if it doesn't actually come to retest this and look for the point of control from the 23rd. Anything is possible. The market is very nervous today after the drop in the Asian and European sessions. Let's see how long the American session holds up. Actually, this is just for context. I don't really make decisions based on that. I make decisions on the screen based on what our system is showing us in the moment. Nothing else. We could trade short and long interchangeably. There it goes against the gap. Let's see if it holds or if it breaks above it. As we indicated, the move was exhausting. We shouldn't have kept buying, and in fact, it exhausted. In other words, it warns us early that the market is about to turn. All right, we can see here. We could have entered short. As you can see, it's a very good signal. Here it is. As I said, we have a good target for today. It doesn't make much sense to continue. There is a lot of volatility. We look at the half-hour candle, we'll realize we need to stay calm. It's a doji. It went up, it went down. This is within the last half hour. We have the POC very close. Just to know the context, but the signals are very, very good. If the system had been on automatic, it would have entered a buy here and a sell here. Well, I don't want to make the video too long. This is the first of a series of videos we're releasing. If anyone has any doubts or wants to see it in action, you can sign up for a demo or send me an email. There is also a lot of information about the product on the website. I'll leave it in the video description. Thank you all for watching this video, and I'll see you in the next session.